Ellen, the U.S. economy was resilient in 2025. What are your thoughts for 2026?
Thanks for the question, Greg. As we're looking at 2026, we see three key actions propelling 26 economy. The first one is fiscal stimulus. You have the OBBA, and you have no tax on ticket and overtime, as well as corporate bonus depreciation. The second one is monetary stimulus. You have the Fed having cut by 75 basis points last year, and that's going to carry through this year with maybe another couple of cuts. And then third, you have artificial intelligence spending, which is just growing like gangbusters, and that's really propelling the economy this year too. So we have three pretty strong pillars of growth.
Can you expand on the AI theme? Because last year, we really saw a lot of money pumped into the economy through that AI spending, through the building of data centers. And the Magnificent Seven stocks took up a whole lot of time and energy in the index.
Well, the Magnificent Seven should probably continue to do pretty well this year, but I do think that the earnings growth is broadening beyond just those stocks, Greg. But particularly if you look at AI, it's not just those companies that are getting the money. It's not just people buying NVIDIA chips, although they are. It's spreading. It's spreading into data center growth. It's spreading into infrastructure, into utilities, into energy, into capital equipment. It's spreading all over the place. And so that is the breadth that we expect to see in the market this year beyond just AI.
And what else are you seeing in fourth quarter corporate earnings?
Well, we've had about 40% of the S&P report so far, and they've been surprisingly strong. So about 80% of those companies have beat estimates this year, and we're seeing 13, 14, 15% earnings growth. And we're looking for 13% for 2026. So when we see that kind of strong number coming out of the fourth quarter, it bodes well for 26.
Okay, so what are your investment themes for 2026? You still see a resilient U.S. economy. You see that there's a broadening trade going on. How can investors make money?
Well, look internationally also. It's not just the U.S. broadening beyond the Magnificent Seven. International stocks are growing, and we all know they're a lot cheaper than U.S. stocks. Emerging market stocks, right now, earnings are forecasted to grow 28% this year. That is fantastic, and those stocks are also cheaper than the U.S. So stay with some of the AI trades, but look more broadly and look outside the U.S.
And then finally, if there was going to disrupt something about your prediction for 2026, what would it be?
There are two things that could disrupt that. The first one is if AI spend begins to nosedive, because as I said, that is driving so much of the economy. It's 40% of all capital spending. It's a big number, $500 billion, very big number. The other thing that could derail it is if the labor market softens. We've seen a little bit of softening around the edges over the last 6 months. It looks right now as though it's stabilized, but if that takes another leg down, that could also derail the economic outlook.
All right, well, thanks for coming on and talking about it.
Thanks so much for having me.